All right, the wait is finally over. The SpaceX stock debut is officially in the books. And look, if you're a retail investor, the stakes have literally never been higher. Today in this explainer, we're going to break down exactly what just happened. But more importantly, we're looking forward. We're stripping away all the emotion, tossing out the hype, and relying entirely on the cold, hard data to map out the exact road ahead.
I mean, just think about the sheer magnitude of this debut. By noon on its very first day of trading, the stock absolutely surged, jumping from its initial IPO price of $135 all the way up to $176 a share. At that peak, the company hit a staggering valuation of $2.31 trillion. Trillion with a T. It was a completely wild ride. And yeah, while it eventually cooled off to finish the day around 161, that massive midday spike, it tells us exactly how incredibly hungry the market is for a piece of this company. But, seeing those massive price swings, we've got to ask ourselves the million-dollar question. When is it actually safe to buy? Look, if you didn't get in on day one, you might be feeling some serious FOMO right now. But take a breath. We've done the math, we've parsed the source data, and we've actually mapped out the exact upcoming dates when this stock is statistically engineered to be at its absolute cheapest. You just need to know the schedule. So what caused that day one frenzy? Well, it all comes down to a massive fundamental imbalance. Listen to these numbers. There were $100 billion worth of orders just sitting out there, waiting to grab this stock. But only $20 billion worth of shares were actually allocated to retail investors through 5 specific brokerages. That is an $80 billion chunk of pent-up demand that just didn't get filled right away. Supply was absolutely minuscule compared to the overwhelming demand, which is exactly what shot the price to the moon right out of the gate. Moving forward, the price action for SpaceX isn't going to be driven by rocket launches or flashy news headlines. No, it's tied directly to what we're calling the insider's calendar. Everything from here on out is tethered to these very specific dates. We had the June 12th IPO. Coming up, we've got July 6th for NASDAQ inclusion. Then early August brings the Q2 earnings, followed by Q3 earnings in early November. Understand these dates and you understand the future flow of the stock. Let's dive right into Section 1, Forced Buying and the July 6th Catalyst. Now, the absolutely crucial point here is understanding how index inclusion normally works. Usually, a new stock has to go through what's called a seasoning process. That's basically a waiting period of 6 to 12 months of active trading before it can even be added to a major index like the NASDAQ 100 or the S&P 500. It's there to allow for proper price discovery. But guys, the rules were completely changed here. SpaceX is being added to the NASDAQ 100 on a 15-day fast track on July 6th, and because of this, the QQQ, passive mutual funds, and all those big funds tracking the NASDAQ, they are literally forced to buy the stock on this exact date, no exceptions. But hold on, before we assume this is going to send the stock into another stratosphere, let's look at the actual dollar amount. Because SpaceX only offered $85 billion worth of stock out of its massive overall valuation, it's really only going to hold about a 0.5% weight in the NASDAQ. It's not going to carry the heavy weight of an Apple or an Nvidia, right? So doing the math, this inclusion only creates a wave of forced buying somewhere between $7 billion and $10 billion. Don't get me wrong, it's significant, for sure. But as you'll see in a second, it's actually relatively small compared to what is looming just around the corner. Which brings us to Section 2, Unlocked Selling. This is the lockup expiration threat. This right here is the hidden trap that usually crushes retail investors who don't do the math. It's the staggered schedule of insider lockups. Right now, a massive amount of the stock is locked up tight. Insiders and early investors simply cannot sell. But think about that first big event. Exactly 2 days after the Q2 earnings drop in the first week of August, 20% of the shares will be unlocked. At an IPO value of $135, we are talking about roughly $64 to $70 billion worth of stock suddenly free to hit the open market. And wow, that is literally just the start. It's followed by staggered 7% intervals, and then another massive $80 billion wave hits at Q3 earnings. And this is exactly why you always have to read the fine print. There is a hidden clause in this lockup agreement. If SpaceX stock stays up at least 30% from its IPO price, which puts the target right around $175.50, it actually triggers an automatic unlock of an additional 10% of shares. That adds another $32 billion to $40 billion in pure selling pressure. If that triggers, guys, we are talking about a devastating $100 billion wave of supply hitting the market all at once right after those early August earnings. To really wrap our heads around this, we need to get into the psychology of the people holding these shares. We're talking about venture capital funds, early seed investors, and massive tech companies that have been holding onto this bag for over a decade. They are currently sitting at a 90x revenue multiple. They're up thousands of percent and literally billions of dollars in pure profit. You have to realize they do not care if the stock price is at 170, 200, or drops all the way down to 90. They have made a mountain of money. So when those floodgates open, they're going to excitedly dump their stock, lock in those profits, and walk away.
So looking at the big picture, you've got this massive mismatch between supply and demand. We have this relatively small $10 billion wave of forced buying in July, and it is just completely dwarfed by a potential $100 billion tsunami of insider selling coming in August. It's just basic economics, right? When that massive amount of supply floods the market, the price is going to drop. Oh, and just as a quick side note from the source data, Elon Musk's personal $740 billion stake, that is locked up for a full year. He is not selling anything right now, so you don't have to worry about him contributing to the August sell-off.
All right, let's bring it all together in Section 3, the action plan. Exactly when to buy and when to sell. So the most crucial point here is how you actually navigate this wild volatility. If you are a current holder, say you picked up some IPO shares or traded on day one, the source data strongly suggests you should be looking for the exit going right into July 6th. That NASDAQ inclusion, it is going to be a classic buy the rumor, sell the news event. Plus, a lot of that buying actually happens off-market in private exchanges, those dark pools, so it won't drive the public price up the way people think it will. On the flip side, if you're a prospective buyer just waiting to establish a long-term position, your instruction is crystal clear. Just wait. And here are your exact step-by-step instructions for taking advantage of this. Step 1. Track that Q2 earnings release date closely. Trust me, it's going to be everywhere in the financial news. Step 2. Wait exactly 48 hours after that report drops. Why? Because that is the precise moment the lockup gates swing open and all that massive supply floods the market. Step 3. Step in and buy the resulting dip. When all that overwhelming selling pressure pushes the stock down, that creates what the source data identifies as absolutely the best buying window of 2026. Which leaves us with one final thought to chew on as you map out your strategy. Are you timing your trades with the insiders, actually understanding the calendar and the math behind the lockups? Or are you just blindly trading on the hype and the headlines? Look, in a debut this massive, knowledge of the actual underlying mechanics is the difference between getting caught in the tidal wave and riding it. Thanks so much for joining me on this explainer. Keep your eyes on the calendar and keep learning.